Hello and welcome to Morningstar. I'm Emma Wall and I'm joined today by Bill McQuaker, Fidelity multi-asset manager, to give me his 3 fund picks. Hi Bill.
Emma.
So what's your first fund pick today?
The first fund I'm going for is the Morant Wright Japan Fuji Fund. It's a value-orientated fund, very much in line with the Morant Wright house style, something with a small cap bias, and it also has a yield bias. And I think that's quite an interesting approach for the Japanese equity market at the moment. One of the great strengths of Japanese companies is that they have got fabulous balance sheets. And the Morant Wright approach to investing is about leaning quite heavily on that balance sheet and the safety that it brings. And so the Fuji Fund is full of smaller companies that have got strong balance sheets, that generate cash, and I think returns over the next few years will be very acceptable to investors, as those balance sheets are either returned in the form of dividends or perhaps in the form of share buybacks, and as everyone shares in the kind of built-up benefit of the underpinning, the underlying strong balance sheets.
And what's the second fund today?
The second fund is Investec Gold. It's something of a safety first fund, in as much as when the world is clement and things are going well, I wouldn't expect gold equity to perform particularly brightly. However, when things take a turn for the worse, as they did, for example, in the first half of 2016, that's when gold equities can really come to life. So there's something of a portfolio hedging characteristic that I think has got a role in any investor's portfolio, and the strategy is well managed, and if gold and gold equities do well, it will be something of a levered play on that theme.
Can I ask a question about that fund? Because I think some people get confused between holding physical gold and gold equities. Do you have a preference with that?
I don't have a preference, in fact. I observe that they both travel in the same direction at the same time. But gold equity tends to be a bit more violent, both when things are going well and when things are going badly. So for people who like the idea of the safety of gold, but don't feel comfortable with slightly more extreme moves, they should go for physical gold, where they're happy to enjoy the good times, because they will be very good, but they can stomach some short, sharp losses. Then I think gold equity is more interesting.
Thank you. And what's the third and final fund pick?
The third fund pick is the Invesco Perpetual Continental European Fund. It's quite a conventional European value-orientated fund, with something of a macro overlay to it. And when I look at the shape of the portfolio today, there's quite a lot of exposure to European banks. There's quite a lot of exposure to the European oil sector, and if, as I think is likely, the first half of next year is characterised by ongoing global growth and ongoing European growth, then I think that probably sees some normalisation in interest rates, and that would be good for banks. And I think the oil sector has been slow to appreciate how much better things look in terms of global growth. So I think there's some catch up from that part of the portfolio as well.
Bill, thank you very much.
Pleasure.
This is Emma Wall from Morningstar. Thank you for watching.